Getting a mortgage for your new home can be complicated. So here's a 6-step guide breaking down the process if you just step foot onto the British Isles. Before we begin, remember to hit like and subscribe because we've got the property information you need. Let's begin by discussing strategy. No lender wants to dish out loans to high-risk applicants, so your job as a borrower is to make your profile as low-risk and trustworthy as possible. The first 3 steps can be taken immediately. Step 1. Open a bank account. It's important for step 2, which is to get a job. There are 3 points to this. Number 1. Most lenders want you to either have lived or worked in the UK for at least 12 months, if not 2 years. Number 2. It's an opportunity to start saving up for the biggest down payment you can muster. Because the bigger the down payment, the lower the loan-to-value ratio and the lower the interest rate will be. Side note, the average UK mortgage rate in 2021 was 2.6%. Number 3. The income multiple, which is how much someone is allowed to borrow relative to their salary. The upper limit usually sits between 4.5 and 5.5 times your income. Step 3. Start working on your credit score, which is written on your credit report by a credit reference agency. It tells lenders your credit history and how responsible you use credit. Most significantly, a healthy score can unlock lower interest rates on your mortgage. Now, the bad news is that as a newcomer, your credit score will start at 0. The good news is that you have the opportunity to build a clean record. Here's some basic tips to start you off. Check your credit reference reports regularly for errors. You can do so for free with Experian, Equifax, and TransUnion. Send all 3 agencies your proof of address and ask them to add a note verifying it. Pay all your bills on time. When you're 12 or 18 months in, you can start working on step 4 to 5. Step 4. Start budgeting and browsing properties online, like at denzity.io/properties, where you can check out a variety of trusted listings. Narrow down a city or borough and identify a price range suitable for you. This will help you figure out how much further you have to save up and what sort of loans to aim for. Step 5. Educate yourself on mortgage options. The 3 popular types of mortgages are as follows: fixed rate, tracker, and discount. A fixed rate would be the most stable option to go for. In this mortgage type, you pay the same interest rate for a period of either 2 or 5 years. After this, it's wise to reconsider remortgaging to attain better deals. As a foreign national, you get a standard loan-to-value ratio 75%, requiring a down payment of 25%. A good credit score could drop that percentage down to 15 or even 10%. But that's still a lot of money. Here's 2 government initiatives that help drop the deposit down to a comfortable 5%. Number 1. The Mortgage Guarantee Scheme. This scheme by the government encouraged lenders to give out 95% loan by guaranteeing to compensate a portion of the net losses if the borrower defaults. You'll be eligible if this is your first home purchase or if you're moving from one house to another. Just apply for a 91 to 95% loan for a house that comes in below £600,000. But best hurry up. The scheme comes up to an end by the end of this year. Number 2. Help to Buy. A similar initiative, this scheme adds some further restrictions. In addition to the £600,000 limit, the government will only cover mortgages for new-built homes. Furthermore, only first-time buyers are eligible for the scheme. When you lay down 5%, the government will provide an equity loan that covers 20 to 40%, and the remaining 55 to 75% will need to be secured by a mortgage. What's the catch? Well, since it's an equity loan, if you sell your house in the future, you have to pay by the government with a 20 to 40% cut of the sale price. This scheme comes to an end in April 2023. It's time to get serious 6 months to a year before you plan to purchase. What's the first thing to do? Step 6. Approach a mortgage advisor before you start property hunting. Why? Because despite all the research you do, it's still wise to consult someone within the industry who can look closely at different lenders and mortgage options. They'll also help you plan for additional costs like the stamp duty land tax, which we will talk about it in our next video on UK tax. Here's a bonus tip. Remember to apply for mortgage pre-approval before you even look at a new house, because that will show lenders that you're certified and serious. Step 0. Always plan ahead. Property investment is a long-term game and planning is the key. Make sure you keep up with real estate information and investment opportunities. Sign up to our newsletter and follow our social media pages now.